Hey there. Hope you're having a great day. I'm Jim Munchback, founder and CEO of Bayrock Financial, and I wanted to spend just a few minutes and do a bit of a market update for May, and the year is 2024. Today is Tuesday, 28th of May, year of our Lord 2024. So if you hear that sound in the background, that is rain. I am currently in my studio in Brazos Bend State Park in our RV. And so I wanted to get this done and get it posted, but the power's gone off. It's almost pitch black outside, and it's only 1 o'clock. Well, it's 2:30 p.m. So anyway, let's jump right in and do a quick review of the market. So last week the markets were mixed. The S&P was pretty flat. The Nasdaq was up 1.41%, and the Dow Jones was up 2.33, which is kind of remarkable. So that was like I said, mixed markets. I'm saying they're mixed up markets, mixed but up. The markets have been going up, 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 and they continue to do that. And so that's kind of what we've been seeing and watching, and in some ways wondering when that might change. Because, and here's kind of the real rub of the market update, is that the Fed is now talking about higher for longer. They're going to be tightening the markets, quantitative tightening. They're doing their things. They're using their tools to try to cool off inflation. And one of those tools is rates, interest rates. And so they're saying they're willing, the Fed is saying they're willing to tighten even more. We've seen rates quite high. They rose pretty quickly and pretty high over the last couple of years. And there is, I expect, there is a lag effect that's going to hit the markets and cause quite a bit of disruption at some point. And now the Fed is talking about tightening for longer and keeping rates higher for longer. So that's something noteworthy that we're watching closely. The Fed is still saying that they're keeping their 2% inflation target as their target, which means they're going to use their tools to try to keep inflation at a 2% range. So we'll see how that works. Not sure that it will work, but the sentiment in the economy is starting to be somewhat deflated as interest rates stay high, and as the Fed talks about tightening longer or for longer, the sentiment in the economy is somewhat dampened. So deflating sentiment means, and one thing we look at is the Consumer Sentiment Survey. It tracks unemployment rates and consumer spending. The bottom line here is that as interest rates stay high, prices for consumers stay high, and this economy, the U.S. economy, is driven by the consumer. So if their spending is hampered or dampened by higher rates, then that's going to impact consumer spending. They're going to spend less because they can't afford to keep spending more. And that is going to ultimately create pressure in the economy and cause lower spending, lower consumer spending, higher unemployment. And when those things start to hit, we'll see some dramatic moves in the markets and investments. So that's what we're looking at, what we're paying attention to. Oil slid over the last couple of weeks, 2% decrease in oil prices. But if you look at the charts, yesterday, Monday, the market was closed for Memorial Day. By the way, I hope you had an awesome Memorial Day weekend with your family and enjoyed some barbecue and time together in fellowship. We had a great Memorial Day weekend here in the park at Brazos Bend State Park. Hope you did too. Anyway, Monday the markets were closed, but the futures markets for oil was up about 1%, and today, Tuesday, it's up even more. So I'm keeping an eye on oil and energy. That's an asset class that I'm very bullish on, but it's very volatile. So again, we're paying attention to that. Interest rates and the increased expectation that interest rates are going to stay up will cause oil prices to put pressure on oil prices, but again, we're seeing kind of a reversal of that today and yesterday. So we're keeping an eye on oil prices. Inflation and GDP data will continue to come in, but the bottom line takeaways for this market update in May of 2024 is that the Fed has kind of had a 180 swivel on their thinking and what they're saying about tightening and interest rates included. So we're keeping an eye on that. FOMO, fear of missing out, is one of the things that I just want to encourage you. It's hard to know when to try to get into the market and out of the market, and long-term strategies require that we be in the market. And you can be afraid of the fact that we've got these interest rates at this level and that the Fed is talking about keeping them higher for longer. And there is this lag effect that at some point we will feel it in our investments. We're feeling it now in anything related to bonds, but that will reverse when rates start to come down. But another thing that will very likely happen when rates start to come down is the markets will very likely come down initially as well. So, but the fear of missing out, if you've not been in the market in the last couple of years, you missed out on a lot, even though there were a lot of reasons to think that the market should go down. But they didn't. They've gone up and up. And like I said, these are mixed up markets. They're mixed, but they're up. So thanks for watching this this update. I'll be back again soon with another update. In the meantime, if you have any questions about your financial plan or your investments, hit the link there's a link in the video. By the way, if you're not watching on YouTube, if you have an account on YouTube, you can subscribe. We have a new channel. I'm posting this video to our Bayrock clients only playlist, but that's on the YouTube channel, which is a new channel, my channel, at Jim Munchback. So I hope you'll think about checking that out and subscribe. There you go. Subscribe on YouTube. If you're let me get rid of this little thing. If you are currently on LinkedIn, that's my favorite social network, feel free to connect with me there as well. I am Jim Munchback, CEO and founder of Bayrock Financial, and I appreciate you watching the video. Like, subscribe, share, and let me know if you want to hear about something else in the world of financial planning or investment management. I'll be happy to do a little tutorial video. In the meantime, have a great week ahead. Take care.